This is very simple strategy. Anybody on this call can use it to flip an account. This is not even you taking full pattern on the account. You're literally managing risk, trading absolutely well, managing risk, entering high probability trade setups, and you're not even over leveraging. You're managing your trades perfectly well. The $50 now 272. Now I'll still show you more trade ideas as well. And right here, after taking this trade, bear in mind, remember, this point of interest that we used for this trade, the point of interest we used was a weekly fair value gap right here. So that means even though we use the 5 minutes to enter this trade, the market is still going to break a 1 hour structure. And right here, you can see the 1 hour structure. The moment this market breaks this 1 hour structure, what I'll do is I'll make sure I'm no longer in these trades. I'll take my profit and I'll be out. And the next thing I'll do is I'll mark this high and I'll wait for price to come and retest that high. So let me make a different color, make it blue right here. So the moment price is coming down here for a retest, I'll be looking for more entries. Again, I'll be looking for 5 minutes break of structure down here, and I'll be risking 10% per trade again. So right here, if you look down here, you can see we have two fair value gaps. So I'll make them red or pink or something. So all I do is I wait for price to come down into this position. The moment price comes down into that position, all I'm looking for down here is a 5 minutes break of structure. And once I see a 5 minutes break of structure, I'm looking for more entries. And right here, you can see we'll have a 5 minutes high right here. The moment I see that break of structure, I'm entering with the high. My stop loss will be the low. I'll add a few pips. In this case, I'll still be targeting a 1:3 or 1:4, or I'll just use the fair value gap here as my take profit. And as you can see, this fair value gap here is a 1:5, so I'll just leave it at 1:5. So my first entry in this case will be a 1:5, and I'll be risking 10% of 272, which is $27. And let me bring out my calculator in this time. So right here, I'll be risking 10% of 272 for my first entry, and I'll also be looking for a second entry as well. And what I'll do in this case, the moment I see a run on liquidity, a break of structure, I can literally just open another position here using this high as an entry right here. The moment I see price break and close above this high, I can use that as my entry, and I can use here as my stop loss, add a few extra pips below, and I can use the same exact target, same area as my target take profit right here. This one is a 1:4.5. This one is a 1:5. So first entry is 1:5. Second entry is a 1:4. And let's see how that plays out. And right here, we're on the 4-hour time frame, both entries. And as you can see, the market rallied straight to take profit. So now if I'm risking $27, remember, now we have 272. And if I'm risking $27 and I made a 1:5 and also $27 and I made a 1:4. So if you do the math, that should be around
270. $27, 9. That gives you around
yeah,
240 something. If I'm not tripping, 2 feet something or 240 something.
yeah. So one is gonna be 135, the other one will be 108. So if you add the two, that will be 108 plus 135.
40.
That'll be around 243. And if you add 243 plus 272,
Wow.
that's 515. So your $50 has gone from $50 to $515. You've 10x'd your capital by following a systematic process. You're not entering randomly, you're waiting patiently for high probability trade setups, and you're not over leveraging on any position. So in case, let's say the trade even doesn't go in your favor, you still don't blow your account. You still have more leverage, more equity to enter the next trade.